Good evening to all. Presumptive taxation was introduced way back to save small business people from various income tax compliances. But year after year, the act has been amended and it has been made complicated. Now, we need to be more cautious while opting for presumptive taxation. Today, we have Dr. C.A. Falguna Kumar to enlighten us on the precautions to be taken while opting for presumptive taxation. Dr. C.A. Falguna Kumar is a fellow member of ICAI, practicing as a chartered accountant at Tirupati since 1979 for the past 41 years as a managing partner of E. Falguna Kumar and Co. He is aged about 65 years. He is married to Srimati Vijayalakshmi, who is a doctorate in home science. They are blessed with two children. Both of them are qualified chartered accountants practicing with father. Daughter-in-law is also a chartered accountant practicing in this firm. He is a classical flute player also. His educational qualifications are MA, MCom, MBA, BL, visa, and PhD. He is a member of the Institute of Company Secretariats of India. He got recently qualified in the Independent Directors Eligibility Test of IICA of MCA. He was a member of Regional Direct Taxes Advisory Committee. He was appointed as a member of Board of Studies of SV University and also SP Mahila University for the period 2012 to 14. He has presented more than 360 technical papers in the past in various CPE seminars in all the four southern state CA branches. On GST, he has delivered more than 50 lectures across southern India. He got his doctorate in accounting and auditing standards for non-profit organization from Sri Venkateshwara University, Tirupati. He is serving the society as a trustee and executive member of several charitable institutions at Tirupati. He has been appointed as a finance committee member for the year for 3 years, 2020 to 22 of IIIT Allahabad. He was elected to the Southern India Regional Council of ICI in the December 2009, 2012, and 2015 elections. He was chairperson of SIRC for the year 2016-17. With these words, I introduce Dr. C.A. Falguna Kumar to you all. I request the viewers to post their queries in the comment box. He will address at the end of the session. PPT has also been shared for your reference. You may download. May I request the speaker to take up the session on precautions in opting for presumptive taxation. Sir, please.
Good evening, madam, and good evening, the viewers. Chairman of Salem branch is Srimati Bhargavi, and immediate past chairman Srimati Sharada Ashok, and all the CA fraternity. I wish you a pleasant evening today, and the topic given to me as chairperson has announced precautions to be taken in opting the presumptive taxation. I am sure I will try to share some valuable inputs to you so that in the day-to-day practice we can do the real good service to the clients while discharging our say this tax professional advisory services. We have been seeing both in GST and the income tax. GST, though it is the latest, earlier VAT laws and indirect tax laws also. The government, though under the direct tax and indirect tax, wants a businessman to comply numerous provisions, maintaining books of accounts. It is practically a little bit difficult or more difficult for small and medium business people to comply all the provisions in the statute. The statute, for example, as we know, the Income Tax Act is having the 5 heads and the business head, business or profession. So this head is having number of stringent provisions to be complied. So as this is very difficult right from the beginning, to give a relief to the small and medium business people, a presumptive taxation, that means a summary provision, That means based on the business volume, if they can pay a presumed income, and on the presumed income, presumed tax, it is known as presumptive taxation. The presumptive taxation which we are going to deal today is only applicable the resident provisions, that is a 44AD, 44ADA, 44A. For non-residents, another four presumptive taxation provisions are there. So we are not going to deal today with the non-residents presumptive taxation, like shipping, that's flight cargo, or say oil exploration companies. For them, if they are non-residents and if any work contract by a Indian government agreed work to be taken up by a foreign national, so then foreign enterprise, then for them separate provisions are there that we are not going to see. We are going to see only the presumptive provisions applicable for Indian business. And these three are not common. There is a substantial difference. If we go minutely, what is the difference and how to get updated with this is more important, because normally once the presumptive provision is there means it will give much relief from maintenance of books of accounts. The main advantage is the every businessman is supposed to maintain books of accounts as per section 44 double A. If his income is more than 2.5 lakhs, the basic limit, or his turnover is more than 25 lakhs. But the books of accounts maintained, if they are to be scrutinized and merely based on books of accounts, if the income has to be computed, as the SSC is not able to comply all the provisions, sometimes technically if you see the income may exceed even the turnover. Technically, if you go on adding, disallowing, and then adding, which is very harsh, because he is not able to maintain the books of accounts or comply the provisions of them. So that's why we are having these presumptive sections. But these presumptive sections advantages we will see, and the presumptive sections limitations also we have to see. Because only if you see the advantages and then simply opt, what are the limitations, what are the other aspects which we have to take into account. Otherwise, say we will land in trouble, especially from 17-18 assessment year, when the section 115 BBE is amended, raising the tax from 30% to 60% with the surcharge of 15%, that is a 75% tax, and then the education cess. The provisions, how they can be applied even to a presumptive taxation opting person. That angle we have to see. So thereby, not only the compliance or say advantage by opting the presumptive taxation sections which you have to consider, we have to consider that risk also. So what is that risk? In how many ways that risk is there? Are we really complying these things? These things we have to see. So I thank the branch for giving me the opportunity of say presenting this paper, as the Salem branch is more closer to me. Number of times I have physically in the branch presented the papers. So this webinar also they are opting. So I thank the managing committee members for choosing this. Now with the PPT I will start. So now share the screen. So please share the screen.
Oh,
Shall I have to say, or you will switch on the PPT, madam?
I'll switch on. Just open that page, sir.
Okay, okay. Are you able to get?
Yeah, yeah, fine.
Okay, full screen I'm going to show so that members can.
Okay. You proceed, sir. We'll just behind the screen.
Okay, okay.
Okay, thank you,
So,
sir.
so friends, as we know, the latest is the professional income presumptive taxation. The old ones are the business people opting 44AD, and then goods carriage vehicles ownership, if it is not exceeding 10, that means any SSA who is owning not more than 10 goods carriage vehicles, then for them separately, because in the country, as we know, the truck owners, maintenance of books of accounts will be very difficult for them. So exclusively for that turnover, for that business activity, for that income, separate provision is there. So a person can have all the three types of income also. A person can have all the three types of income also. But to be excluded, particular portion, so that we are going to see. So first we will start with this 44 AD. So and then we will go to the 44 AD professional income, and then the 44 AE the goods carriage vehicle income. So the small and medium businesses means actually there is a cap. So this cap earlier was 1 crore. Now it has been enhanced to 2 crores. And this year budget 2 crores also has enhanced to 5 crores. What is that 5 crores? How it is going to have the impact, that also we are going to see. Because the 1 crore limit is there even now in 44AB. 44AB is the 1 crore limit even now. 44AD limit is 2 crores. Then what is the care one has to take? If a person carrying on a business, if he is interested to opt 44 AD, he must first go to 44 AD. If he is not able to satisfy the conditions of 44 AD, he must come back to 44 AB. So, for example, his turnover is above 1 crore but below 2 crores. But is he satisfying the conditions in 44 AD? We have to see. If he is not satisfying 44 AD conditions, he cannot think that 2 crores is applicable for tax. He must come back to 44 AB, and there still 1 crore limit is there. So that's how the limits we have to see. So every person who has got an income, business income above the basic threshold limit, that is 2.5 lakhs, has to file the return as per section 139(1). Now that business people having the income limit is again supplemented by the recent amendments in the Income Tax Act, that if a person in a current account is depositing the cash more than 1 crore, so he too has to file the return of income. So we are now analyzing first the return filing provisions. So in the return filing provisions, if a person is having a current account and he is depositing the cash, normally it assumes that the business receipts, normally the sales is the receipts. So those cash receipts, cash sales indirectly, he is depositing and using for the business purpose only. Then he has to file the return of income. This income above 2.5 lakhs is another condition which is not applicable for this. So similarly, electricity charges. If a person is paying his electricity charges in a year more than 1 lakh, now for this 2021 assessment year, for example, a roadside welding shop person, he is somebody's goods, iron gates or iron steel articles. So he tries to manufacture or say convert them into usable articles by welding. He is not a dealer in goods. He is only doing a service of welding. His electricity charges per month will be 10,000 rupees. So per annum, 1,20,000 rupees, exceeding 1 lakh, he has to file the return of it. Maybe a cool drink shop owner. So like that, the second condition in 139 newly introduced is electricity charges paying by a person which exceeds 1 lakh rupees per annum, he too has to file the return of income. And the third new condition also, because these two examples what I have given, they are connected to business. Without connection of business also a new amendment has come, that also just incidentally let us look into. Having incurred rupees 2 lakhs for foreign travel of himself or for somebody else who is depending on him, if he incurs any foreign travel expenditure also, he too has to file the return of income. These are the latest amendments. So normally the 44 AD the turnover up to 2 crores limit is applicable. So the 44 AD or ADA or AE, the Indian resident entities, individual, HUF, partnership, even a limited company can come into this presumptive taxation. For which section they can opt, for which section they cannot opt, we are going to see. So generally, common benefits we are going to see, and then the differences between these three sections also meticulously we are going to see. So the advantages of these presumptive sections: first, no books of accounts maintenance. So though 44 AA section maintenance of books of accounts, it is saying when a person is opting, he is not bound to maintain as expected by the act, but not the 100%. I can say the business information based on the turnover, based on the professional income, gross receipts, he has to opt the presumptive tax. That means for that, this is the correct thing. He must be able to substantiate. To that extent, some records, basic records, he has to maintain, but not foolproof books of accounts. That's the advantage. So what is foolproof books of accounts? Vouchers 100% for every expenditure voucher. He has to maintain and evidence, and then say the compliance of mainly cash payments more than 10,000, 40 capital A3, or expenditure subject to TDS provisions. There are a number of TDS provisions, as we know. So once his limit of turnover exceeds 1 crore, though he has below 2 crores, the TDS provisions will apply. Even now, though I say TDS 40A, IA is not applicable, it doesn't mean that TDS provisions are not applicable. By non-compliance of TDS provisions, disallowance will not be there. But TDS compliance is there even on these presumptive taxation opting persons. The TDS provisions, unless we see meticulously, that is above 1 crore. So he is avoiding tax audit by opting presumptive taxation. He is avoiding the tax audit. He is avoiding, because in the tax audit report, non-compliance of TDS provisions you have to mention. So you are not filing the tax audit report once you opt the presumptive taxation. You are not say having any disallowances. Simply the presumptive income you are offering, but the TDS provisions compliance is there. That in another slide we are going to see. The other advantage is normally business people have to pay once their basic limit of 10,000 rupees, the advance tax liability crosses on their income. They have to pay the advance tax in 4 installments, as we all know, in 4 quarters. But a person who is opting presumptive taxation, he can pay only in 1 installment the advance tax, that is March 15th. So the first 3 installments he need not pay. So these are all the advantages of opting the presumptive taxation. So now we will see other details. So the 5 crores turnover, what is the new limit? Though this is introduced in this budget, this is applicable to 2021 assessment year. What is this 2021 assessment year amendment? If a person is having below 5 crores turnover, gross receipts, if he is incurring more than 95% of his expenditure through bank, if his receipts also are more than 95% through bank, both his receipts and payments, so then he need not comply the other provisions, that is 44 AD or 44 AB. That means as per his books of accounts, whatever is the income, that income return if he files, that is sufficient. He need not. Actually, the finance minister, while introducing this provision, has said the tax audit as if it is a burden. One need not go to the auditor, have the trouble of getting the books of accounts, provided he complies that less than 5% only is the gross revenue in cash, less than 5% is the total expenditure he has incurred in cash. If he satisfies these 2 conditions, less than 5 crores person can avoid. So this 44 AD, he need not, and he can go for the income. That's what the new provision says. So the provisions less than 1 crore, there is only 44 AD. That means if a person is having, except the first business starting year, he can, if the presumptive taxation, even for the first business year, he can opt. And if he is having less than 2 crores turnover, he can opt for 44 AD every year. And above 2 crores means he cannot opt 44 AD. He must go for 44 AB only. So then the person who is having 44 AD income, if he is an eligible person, eligible SSC actually, and eligible business only can opt for 44 AD. So these three conditions we have to see meticulously. So earlier there were different businesses, 44 AD, 44 AF, some different sections were there. Now any business other than, so any business other than means actually profession is excluded. The goods carriage vehicles business is there means for that business a separate provision is there, 44 as you have seen. So that business should not be clubbed with the other businesses. All other businesses you must club together. So a person is having a jewelry shop, along with the jewelry shop he's having a cloth shop also, side by side or in the same premises. So though he is maintaining two separate set of books of accounts, so if his total turnover is less than 2 crores, he can opt 44 AD. All businesses turnover must be put together. Now the business maybe he is eligible for 44 AD. And then only three types of persons this 44 AD is eligible. So what is the category? Individual HUF partnership form. So an individual can opt carrying on the business 44 AD, a HUF can opt, a partnership firm can opt, but not an LLP, but not a limited company. Where it is a public company, private company, though it is having less than 2 crores turnover, it cannot opt. Similarly, a person who wants benefits of exemption, that is just like SCZ section 10A, 10B export oriented units, if their income they want to claim exemption, or for their business income if they want deductions. So as we know in section 80, income based deductions are there. A particular chapter is there. And so in that 6A chapter, particular category, C category items are there. Income based deductions. They should not opt because this is presumptive taxation. The benefit is given presumptive taxation. Those SSCs who are not opting those exemption or deduction sections, then only they are eligible. Now we will come to the basic question of, after satisfying these two also, eligible SSC, eligible business, this is the serious thing which we have to deliberate and dwell upon for a lengthy time. Eligible person. So in addition to eligible SSC, eligible business, we have to see, is that SSC an eligible person? So what is that eligible person? A person who is carrying on a profession or who is earning income by way of commission, brokerage, or having any agency business, he is not eligible. So we have to see, a person may have simultaneously the eligible business. As I told you, he is having only say jewelry shop and cloth shop. Besides that, he is a professional earning some professional income, or he is having some commission agency business also along with eligible business. He is having some income, some brokerage or agency business also. Then he cannot opt for 44 AD. So exclusively for that business, question of not opting is not there. For the total eligible business, he is not entitled to. I will give 2-3 examples, then we can understand it much better. For example, an engineer. Engineer is a professional. where it is mentioned as profession. So we are having that section 44AA, the professionals list is there, that the doctor, engineer, auditor, the company secretary, film actors, film production people, so the interior decorator. So the specified professions are there. Only those professions are the professions referred to here. So I am giving you the example of an engineer, being a qualified engineer. He is undertaking works contracts. So he is constructing for somebody else some buildings, let us say. Also, as a professional, he is having some engineering consultancy income. Natural, every engineer who is in the field of say professional work like undertaking the being a qualified engineer, he can offer his services as a professional. Once he is having some part of, it may be small, 10% of his total business plus professional income, but doesn't mean if he's having some part of that income, he is not eligible to opt for 44 AD for his works contract business. So once he is not eligible for 44 AD, again he must go back to 44 AB. If that business receipts exceed 1 crore, he must get them audited under 44 AB. And you may ask immediately a question. For the professional income, can he go for 44 AD? Definitely yes. Here, though he is prohibited, such prohibition is not there in 44 ADA. A person who is having some business income is debarred from 44 ADA. Such a negative condition which is there in 44 AD is not there in 44 ADA. So I will give another example. Another example, an advocate practicing as an advocate. In addition to that practice, he is selling some law books. He is also having a bookshop or a small bookshop where he purchases law books which are required for his professional colleagues. So he is selling. So books purchasing, selling is a business, normally eligible business, but being a professional, having some practice income, he is not eligible to opt 44 AD for his business income. I'll give the other example of a doctor. Normally, which we see, doctors, in addition to their practice income, they will have their own specialized medicines and medical shop in front of their clinic. A dermatologist doctor. So the dermatology medicines are peculiar medicines. So the doctor only prescribes those medicines. So he opens a pharmacy shop in front of his clinic. So he is carrying on that medicines purchase and sales. So can he opt for 44 AD? He cannot have, because the section says that a person who is having a professional income, who is earning professional income, are barred from, he may be a professional, without profession only business, definitely, because of qualification, not the prohibition, because of using that qualification to earn some income makes him not eligible. So this is the thing, majority of the people by mistake, without observing this meticulous provision, sometimes by mistake they try to say opt for 44 AD. Some more examples we will see. The commission and brokerage. A person who is earning commission and brokerage is not eligible to opt for 44 AD. Then what is meant by commission and brokerage? I have given you this citation, the CIT versus Ahmedabad Stamp Vendors Association. So similarly, Hindustan Coca-Cola Beverages Private Limited. This the first one is the 2012 decision of the Supreme Court. Actually, the second one is a Jaipur ITIT Tribunal 2017 decision. What is commission is discussed here. So normally in the Income Tax Act definition section, you don't find the definition of commission, but commission is explained in 194H. For the TDS provisions, the commission is explained in 194H. So the commission means, or brokerage, it includes, means in between two persons as a third party, either for making the seller to sell his goods through the buyers. So some as a mediator, he has earned his offered his services and gets some benefit. That is the commission. That is the brokerage. In other words, without getting the ownership in the goods, or for services also, not the goods, services. Service provider is somebody, service receiver is somebody, but he as a middleman, the present associate as a middleman, has done some service linking between these two. Because of his ability, skill, he made the two people come together and complete the business transaction. For helping them, he gets his commission. So what he gets is the commission. But some peculiar cases you see in the Stamp Vendors Association, as we know in any state, government prints, central government actually prints the stamps. That is non-judicial stamp, stamp paper, what we call. Stamps are several types. In that non-judicial stamp paper is the common thing, as we call it, as a document for a registration of sale deed, so agreements. So the stamp papers are printed by the central government, supplied to the state governments, and then the state governments, through their treasuries, district treasuries or say sub-treasury, they sell this to the authorized stamp vendors. So those stamp vendors will purchase a 1,000 rupees document, 500 rupees paper, 200 rupees paper, 100 rupees paper, like. So the government, on the face value, if he sells, and on the face value, if he is going to sell, how he can get the income? So they give the discounted rate. So there is a 1,000 rupees paper, maybe 10 rupees. For 100 rupees paper, maybe 5 rupees. So like that, the treasury sells at a lesser value than the face value, and for the face value, the stamp vendor has to sell it. Now, is it a commission? Is that commission subject to TDS? Is the question. So in this case, the matter went up to the Supreme Court. It also said the ownership in the stamp papers, the moment the state government sells, though on behalf of the state government only, he is selling as a stamp vendor, the risk and reward of those goods, or say the paper is also, stamp paper is a goods, it's not a service. So the risk and reward of this ownership goes with the risk and reward. For stamp papers, who is the owner after purchasing? The stamp vendor is the owner. Still, the government is not the owner because it received its full money. Whether, though there are certain conditions that he should sell it to with the address, with the identifiable person. So register has to be maintained, and for his sales, he must submit that sales register to the government. And then only the other papers again, second time he can buy. So like that, so many conditions will be there. It doesn't matter, but there are incidental and ancillary conditions, but the ownership in the goods passes on the moment he purchases, and then he again sells them on the face value. So it is not a commission. So the court has held. Similarly, in Hindustan Coca-Cola beverages, so the MRP rate will be there on the cool drinks. The company gives distributors a rate, retailers a rate, or some other person. So here it is their goods, the discount given is not the commission, and the TDS provisions are say 194. We cannot call it as commission. Why we were discussing about this commission? Normally, business people, in addition to their regular business income, for example, a paint shop, he is a dealer of Asian paints. He purchases paints and he sells the paints. But at the end of the year, because he achieved some turnover, in particular conditions in a particular month or in a particular year, the supplier, in addition to the money what he has collected, he gives a credit note or he gives a discount, like thing turnover discount. Sometimes by chance, he may call it a commission given. So it is a receipt to the SSC. He purchases the goods, says the paints, he sells the paints, he earns his income, the risk and reward of ownership and everything is there. But what he receives is a purchase discount actually. So the correct way of disclosure in the accounts also, as per the accounting standards, is deducting that purchase value discount from the purchase only. We have to show in the accounts also. Sometimes by mistake, the accountant who is not a professional may bring the accounts to you and name it as commission. Because he has mentioned it as commission, we cannot say that he is ineligible for 44AD, because the word is not the criteria but the real nature of the transaction. So there are a number of business situations which should be very clear. For example, you are having a KFC, a branded food chain of restaurants. So there may be an agreement that the brand owner may say, you give all your services, you provide me the business place, you provide me the men, you provide me the facilities like air conditioning, so many security, so many services. I will bring my goods and I will sell my goods, and I will give you some commission based on the sales. So then the person who is really carrying on, that is, he has given his shop, he is incurring some expenses, but the brand owner, he is bringing his goods and he is selling in this premises, he is utilizing the services, and based on sales he is giving some remuneration to the person who is providing the services. Definitely it is the commission, because it is the for the services what he rendered, he is not getting the sales total proceeds. On the sales, some percentage he is getting. It is a sales commission. Then once he is having a sales commission, either for that business or for some other business he is owning, in addition to this, either for some other business or for the same business, he cannot have 44AD option. So once the gross receipts, including this commission, because it is a business receipt, other business receipts and these commission receipts exceed 1 crore, 44AB. If they are less than 1 crore, without 44AB, without 44AD, as per your books of accounts, which you have to maintain, the SSC has to file the return of income. So similarly, the agency business. So several people, C and F agents you will have, or some other agency, say businesses, if we are doing, if an SSC is doing, he is not eligible to opt for 44AD. Sometimes some type of goods he may deal as an agent, and some other type of goods also in the same line he may deal as a owner. So once he is having that, or say if you see in the real life world, travel agents we call them. What the travel agents do normally? Travel agents enter into agreement with the traveling service providing airlines, or say train, IRCTC. They get the ticket booking agency. So what they are selling is the somebody's tickets. This person, travel agent, is selling. He gets his commission. So because he's doing the agency business, he cannot opt for 44AD either for that business or any other business also. That's the most important thing. Once, twice, I'm stressing this. So now share brokers, normally a person can buy the shares and sell the shares either as a investment offering capital gains or as a business person also. Whether you deal shares as a business means it is a business income. If you buy the shares and sell the shares as a business transaction regularly, for that business income based on the turnover 44AD one can opt. But the share broker who is selling, because individuals as individuals who cannot go to the BSC or NSC and directly buy, only through a authorized broker, share broker, we have to go and buy, maybe electronically or maybe normal way of also. So the person who is providing you that service, share purchases, shares, securities purchases and sales, he gets his brokerage. So he collects it from the persons who avail their services. So once he is having that brokerage income, then he is not eligible. So similarly, now I want to say, so my personal opinion, a cloth shop man is dealing exclusively in drapery, cloth, the dress materials. So he is having less than 2 crores turnover, and some of his friends who are ready to sell a house plot, and some of his friends are ready to buy the house plots. As a mediator, he has done that single transaction in a year. He got the friends also having done the service. They paid everything, say transparent. So the friends said, yes, if we utilize somebody else, a professional real estate broker, they would have charged 2%. As you are a friend, I am giving you 1% brokerage. So the persons, both the purchaser and seller together, have paid 0.5, 0.51% to this cloth shop owner. Now, is he borrowed from opting 44 AD for his cloth turnover business, which is otherwise eligible. He is an individual, his turnover is less than 2 crores. So, in my view, yes, because a single transaction of that commission, what he earned, is other source income, not a business income. This section 44 AD 6 is prohibiting a person who is earning the commission as a business income in the business head. If he's having the other source income, he's not a businessman. So in the other source income. So whether it is a regular income or other source income based on the number of transactions, number of say circumstances. Business means actually it is a very big subject. Business means, say for example, a person buying agricultural lands not within the urban limits, beyond the urban limits. Every year he purchases 2, 3 agricultural lands. After 3 years, 2 years, 4 years, he is again selling. That means every year he is purchasing 4 and selling 2, 3 or 4. So for 4, 5 years he continues. He can argue saying that, sir, it is not a capital asset. So I am getting short-term capital gains or long-term capital gains. So no question of admitting any capital gains because it is not a capital asset. So where is the question of taxation? Everything is exempt, no? Just like agricultural income, the agricultural land also outside the assessing officer may say the for capital gains section it is a capital asset, whereas your repetition of transactions shows that not as an agriculturist you are owning the land, you are a businessman investing in these non-capital assets agricultural land, so it is a business income. Then you come in 44 AD or you get your books of accounts audited if you are above this 2 crores limit. So like that he will say. So the business word is a very say debatable and highly based on the situation, the intention, the volume, the money, the repetition of the transactions, the intention of the person who is doing these transactions has to be kept in mind. So based on that, in the example what I have given you, that is the a cloth shop man having a single transaction of real estate which is not connected to his business, and in between the friends has done and he got some money, he is honestly admitting it under the head other sources, definitely is eligible for 4480. So this is how we have to look into the real life situations. A number of practical situations will be there. Merely because something is received as a commission, it doesn't mean that it is a commission unless he acted, if he is acting as a principal to principal, no question. He is acting as an agent of somebody or somebody's goods without ownership he is dealing or some services he is doing. So not as a principal to principal, but as a middleman, definitely what he gets is a commission or brokerage, not eligible. This care we have to take. Now we will go to the 2.5 lakhs income limit. Already I have explained you, but actually in this 4480 section, if a person is having less than 2.5 lakhs income, he need not get his books of accounts audited and he need not say opt for 4480 also. A 4480 opting person has to file the return of income if his income is more than 2.5 lakhs. If his income is below 2.5 lakhs and if he says, yes, I am not having taxable income, not necessary. So that option is also given to the SSC here, because small business people still smaller income. But in case loss is there, he must file the return of income in time. So even without tax audit, because if he wants to carry forward the loss, what he says is correct, less than 2.5 lakhs, but no loss is there. He need not file the return of income, but he has to file the return of income when below 2.5 lakhs also is having actually the loss, but he wants the loss to be carried forward means definitely he has to file the return of income. So that is the section 80 what we have to see. Then how to calculate the turnover? Here some 4 5 important points are there. So the 44 AD section gives the option on his business turnover, eligible business, eligible person. If the turnover is or gross receipts are less than 2 crores, he has to on his bank receipts portion of this turnover, not only during the previous year, even the previous year related sales, gross receipts, turnover collected after the close of the previous year, but before the due date of filing of the return of income, 6% is sufficient. Or if it is a cash portion, 8%. So, how do you segregate and what is the care one has to take? Actually, in this year 2021 income tax returns to be filed ITR 4 for presumptive taxation, what you have to do? They have released in month of March itself the form. Again, due to COVID, they have taken back this form. They want to recast some lines extra data what they want and again give this, because savings instead of March 31st of 2020, even if you make savings in April, May, June related to the income of financial year 1920, still you are eligible. So the savings made in this 2021 financial year related to assessment year 2021. So whether you are opting or not, those extra information columns they want to provide, that's how they want to change this form. But what is the important thing what I want to mention here in this, for 44 AD opting people, wow, for the first time for the assessment year 2021, an assessee has to declare through this return during that previous year two separate columns, one for cash, other one for bank. What is the year beginning cash opening balance, during the year cash receipts, during the year cash payments, what is the closing cash? Similarly, for all the bank balances put together, what is the opening bank balance? All the one account or more accounts, business accounts, please put together. What is the total opening bank balance, bank receipts, bank payments, and the bank closing balance one has to give. Now, though in the very first slide we have seen an assessee need not maintain the books of accounts once he opts 44 AD. The form in the act is not there. In the rules, it is not the rules mentioned to the form. So through these rules, the government is asking a businessman, hey, you have done the business, you are opting 44 AD, please give me, is it totally cash or partly bank, partly cash? So earlier we were giving only the bank accounts. Earlier we were giving only the year-end cash balance. But here, throughout the previous year transactions, one has to collect, collate, and then sum up and give. So this is the change in the written form. So this indirectly says we have given you not an option not to have the rigor of these disallowance provisions. So a summary income opting is given. Here also one word I have to give you a caution. The word exact word used in 44 AD or ADE or AE is either the specified percentage, 6%, 8%, or any higher amount claimed to have been earned can also be given. So when if his actual income is less than this threshold, then also he can go for this presumptive percentages or presumptive figures, 44A, the figures, business and profession percentages. So the you are having less than the presumptive sections given percentages or say amounts income. Very good. How can you say that less than? That means because you are maintaining some books of accounts and reasonably you have calculated your business income. So you are saying that your income is below the threshold limit. Two options. Either you offer this presumptive income and avoid 44AB, avoid scrutiny. In the scrutiny, if the officer asks you all these disallowances, you have to prove. So instead of complying all these difficult sections, go for presumptive income, though your income is less than that. That way, you are giving you a peaceful life. That means they are purchasing the peace. In other words, actually, the word purchasing peace is not to be used by the Supreme Court decision. So the income tax department is not here to sell the peace. That's what they said. So anyhow, indirectly, by opting a presumptive taxation, the SSC by paying something more for not real income is less. But anyhow, he wants to have the peace. Go offer the presumptive income and then be peaceful. So that is what the section says. Or any higher income claimed to have been earned. This is the very, very crux of the problem. What is that? Higher income claimed to have been earned. So actually, the word claimed, if it is not there, majority people will declare, depending upon their income, say whims and fancies. In 1 year 12%, in 1 year 20%, another year 8%. Again, when he wants money, then 20%, 25%. So that is not the word they say. Any higher percentage, that is simply say claimed to have been earned. So the SSC is bound to establish that he has earned that much higher percentage. Especially with this 115 BBE, what I want to say, the claim to have been higher income means the assessing officer can say that you have earned really that 8% or 10% only. Extra another 10%. You offered 20% liberally for taxation. That extra 10% consistently, if I go back to the earlier 4 years, you are in the business, same business 4 years. Every year you are getting 8%. Now you are offering 20%. Why? How you are earned? How you have earned? Show me some sale bills. Because based on the sales you are offering the income on the turnover. So he can take random 10 sales invoices and then ask him to show for those 10 invoices the relevant purchases. The difference between the purchase and sales in 10 months, 10 different sale bills, the corresponding purchase bills, and if the GP is calculated, GP itself is say 10%. The net profit what you are offering is the net profit, the 8% or 6%. How you got 20%? That means the excess income I will treat it as other income. So not a source, not explainable income. Source not explainable income is caught by section 115 BBE. So one should be very careful in offering voluntarily higher income also. That's my personal view. So similarly, now for this term, the turnover gross receipts. What the word turnover, gross receipts, sales? A beauty parlor running woman is there. So a lady is expert in making the brides brighten. So she is a beautician. So she is not having turnover or sales. She is having only gross receipts because doing the service. She is not a professional. In reality, she is a professional. But the Income Tax Act word professional is not covering a beautician. So like that, the service rendering people for their services also they can. For example, a money lender, you take common as a say money lender. For a money lender, interest income is the gross receipts. So if the based on the interest income, he can offer the presumptive tax. A money lending businessman also can offer 44 opt for 44A. So the sales is for goods, for services normally the gross receipts, or for the sales turnover is the word which works. Now, how to determine it? What are the common mistakes? Some 10 common mistakes are being arrived while applying these sections. There is the words sales, gross receipts, turnover. And it is the duty of the SSA to include the correct amounts in this turnover. Based on that, yes, What is to be included, what is to be excluded, I will go through, and then I will explain the common mistakes where they have to be there. For example, scrap sales. In addition to the normal goods, finished goods, a manufacturer is there. Manufacturer is also eligible. Earlier, several years back, manufacturers were not eligible for presumptive tax. Now, even a manufacturer is eligible. Every trader is eligible. Even including the real estate, a person is selling the house plots, buying the house plots and selling the house plots. He is also eligible. Though it is a real estate, his turnover is less than 2 crores. Oh, yes, no problem. So similarly, a manufacturer is having, in addition to main finished goods sales, is having scrap sales. So scrap sales is also part of turnover. So similarly, the money lending interest already I covered. So now, in case the government gives a subsidy, government gives sometimes capital subsidy, sometimes revenue subsidy. So revenue subsidy is also turnover, including the insurance claims. For example, some damaged goods are there. Stock insurance is there, inventory insurance is there. For damages, you claim the insurance claim. So that also is a receipt. So the liquidated damages, for example, in the business performance, not able to perform some contract. So the other fellow who failed to fulfill this contract gives him liquidated damage. Whatever is recovered towards liquidated damage is also turnover. So advances forfeited from customers. If we see this, so some customers give the advance. We say within 30 days, if you buy your advance, I will adjust towards the sale proceeds. He has not turned out within 30 days. Then we will forfeit the advance. That forfeited advance also is a revenue receipt. That is also part of gross receipts. So not only the actual sales, the incidental receipts connected to the business are to be included for the purpose of turnover. What is to be excluded if you see? GST collected. Normally, if a person is having 1.5 crores turnover, say for example, 18% total he is having the sales. That means in addition to 1.50 crores turnover, 27 lakhs GST also is collecting. This 27 lakhs collected maybe through bank, maybe through cash. In the return form also you may fill up, because the actual receipts what you have collected will be there. Through bank, through cash, you cannot eliminate them. They are the business receipts, you show them. But it doesn't mean that based on that you have to pay the 6% or 8%. Because GST collected, normally the accounting principles, on behalf of the government, the businessman is collecting. He must maintain this as a personal account, not as a nominal account. But the option is given. The method of accounting, it's not forcing you to include the GST. The method of accounting, section 145, for that matter, for the 44 AD, a person can have only cash system of accounting. A person can have only a real estate businessman. A real estate businessman can maintain only on cash basis. Because just like a paint shop or say iron and steel shop where they sell mostly credit and then recover the money, the real estate businessman will not sell on credit. Only when he receives the money, he will sell, register the document. Otherwise, no. So a real estate businessman can opt 44 AD, and the turnover for him he can opt based on cash system, no problem. So based on the method of accounting, normally the GST, if he wants to include on the GST also, he can maintain the books and then say on the GST included amount he can offer 6% or 8%. But normally no prudent businessman will do that, because nowadays GST portion is heavy, and the GST registration once he is having the GST collected cash ledger, credit ledger, and then say the electronic cash ledger, credit ledger, and in the books of accounts also what is collected, what is input tax offset, and then the balance he is paying. So GST collected is not income, GST paid is not also expenditure. So that's how without GST, what is the turnover? That is the turnover. Then similarly, bad debts recovered. In money lending business, we are seeing that interest is the income. Then bad debts recovered, is it income? Is it the revenue to be included in the turnover? No, because bad debts you write off. For separate bad debts write off, there is no section. Actually, I used to say a person is having a normal business in goods and also some portion of money lending activity. The money lending activity, if it is of a lower volume, he can offer that money lending interest as a investment income under the head other sources. The biggest difference offering money lending interest in the business head and the other source head. Along with his regular business, cloth business, he is having money lending business also. The advantage of offering it under the business head is bad debt is allowable deduction under the business head only. If he is offering money lending interest as other source income, bad debts there is no deduction. Bad debts is a loss, not an expenditure. So in the other sources, expenditure only can be deducted, losses cannot be deducted. Bad debts is a loss, you cannot deduct. That's why money lending business is offered as income. Then the money lending business, bad debts recovered is there as a turnover, let us say. So now, is it a turnover? It's not, because bad debts recovered is only already claimed expenditure now being recovered, just like reimbursement of expenses. Then it is not to be included as turnover. Similarly, fixed assets and investment sales. So some portion of the fixed assets are sold or some portion of the investments are sold. They may come through the bank naturally, because now the 269 SS amended from 15 from 1/6/2015, the any immovable property more than 20,000 rupees if you sell, you have to receive through bank only, because this is the 269 SS amended specified sum. So the amounts you may receive doesn't mean that is the turnover for the purpose of this thing. So similarly, I have already explained about the trade discount received. Now an interesting question comes. A person is a partner in 4 different firms. His activity is only looking after all the four partnership firms. From every firm, as per his share, he receives A, interest on his capital, B, remuneration for the services, C, income as a partner having the specified percentage. Now, the question, section 28 of class 5 says the interest and remuneration received by a partner from a firm, to the extent they are allowed as deduction in the hands of the firm, is the income in the hands of the partner. So it is a business income, business head. Now, will this become a gross receipts or turnover, and based on that again 8%, 6% can he opt? So the 2 supplementary questions, partners remuneration interest is not to be taken into account for gross receipts. This is the 2019 latest prediction of the Chennai Tribunal. So the partners interest and remuneration are not to be taken as gross receipts for the purpose of this 44 AD, though it is a business income. It's not a professional income, it's a business income. So you have to exclude them, offer them for taxation, and only for other businesses carried on by the SS. Here the firm has carried on the business, he got only the income. So similarly, partnership income receipt also, which is exempt under section 10, shall not be taken for this purpose. So this is how these preliminary precautions we have to take. We have got 2 more sections, so we have to rush through. So a little bit speed will increase. So then interest income, when to include and when to exclude. So normally in any P&L account for any businessman, many number of times interest will be there on the income side, interest will be there on the expenditure side also. For example, a works contractor, on his works contracts gross receipts he is offering the presumptive taxation. He is having interest income from the bank. So is that interest income to be included in the turnover or not? If it is related to the business, in the sense he has given bank guarantees to the, he is a contractor, for the contractee as a security he gives a bank guarantee, performance bank guarantee. To give the performance guarantee, the bank insists on some deposit, thereby he is earning some income, interest income, and which he shows in the P&L account. So definitely that income to be included in the turnover. Whereas the same person, out of his surplus business income, he made an FD voluntarily. That FD interest is other source income, not to be included. Because he is an individual, the accountant might have written in the books of accounts and brought to you. So unless we see the interest nature, is it voluntarily made FD and then and income, or say business process he and the interest income, we have to see. So this is the decision of 2007 decision of the Delhi I have given you. So IT special bench. So similarly, limited company dividends, for example, if he is really a shares buyer and seller, trader in sales, definitely dividend is, so earlier exempt, now dividends from this year onwards tax, normal taxable income. Earlier dividends fully exempt. Even if they are exempt in the accounts, they are there. So the dividends received by a share trader ought to be included as his business receipts. So for an investor, it is other source income, not a business income. So some of the common mistakes, let us examine in this 44 AD. This is actually to be very small mistakes, small difference will be there, but to disclose the correct income is the burden of the assessor. For example, nowadays the hotels, every room booking is through digital way. Goi, Bibo, Oyo rooms, this, that, they will say. So there, the bank account of the businessman, based on that, if the accountant is writing the books of accounts, he will bring you only the bank receipts as his turnover. Why? What the mistake he is doing? A customer who is booking a room for 1,000 rupees pays 1,000 rupees to the OYO. So they will deduct their, say, 20% commission, assume, and then 800 rupees they transfer to the accommodation providing the large hotel owner. So here 200 rupees receipt is missing, and 200 rupees expenditure commission paid also is missing. So actually his income may be the correct income as per books, but as per presumptive taxation, it is a wrong income based on the turnover. So the digital transactions, there is nowadays no shop, even roadside vendors are keeping the swiping machine, small people. So you have no cash, okay, you please swipe your card. So the credit card swiping, what it is, the buyer of say 1,000 rupees goods, if he swipes the card, the shop owner will get only 998 rupees normally. The percentage will differ based on the card. Is it a credit card, debit card, some other types of cards are there. So based on the card nature, the commission will be deducted by the banker. He collects from him 1,000 rupees. But for the shop owner, it pays lesser amount. That is also the gross receipts forming part of, because at the end of the day, for each machine he must close it, and then how much sales made recorded properly he should record. There will be a summary of the transactions of the day. Next day he should open afresh, closing the particular day transactions. Otherwise, say if he is not getting that transactions based on the bank account only. Generally for this card swiping machines, some, if he is having, say, example, SBI cash credit is there. So SBI is not given the, let us say, suppose card swiping. He will go to the ICICI Bank or HDFC. They will give the card swipe. So the credits will go to that bank, and then every day evening they transfer them to the OCC account of the SBI. So what is collected only you will see. Normally this now say petrol banks, 50% of the sales are through cards. So majority of the business people nowadays, when they are having the card swiping, unless the swiping charges are included in the turnover, the turnover is missing. Similarly, GST factor, as already I have explained you, debtors collections, the other business receipts. So these are all the transactions. If they are coming through somebody else, a proprietor is having, he sold the goods, and his money is not coming to his bank account, his son's bank account, it is coming, let us say. So that collection will miss. So similarly, the business will have other types of issues, not only the main sales, all the sales we have to show. So the mistakes in this presumptive taxation opting people. For example, a works contractor. A works contractor based on his 26 years, because the other persons are all government agencies, they give the works to this SSA. So in the 26 years TDS, sir, that is my turnover. So based on the turnover, 8% you are offering, and then your opening WIP will be there. Based on 8%, your closing WIP will be arrived. But an intelligent officer, next year April, what are the bills collected by you? Next year 26 years, by the time when the case is taken up for scrutiny. So if we pulls the 26, actually this 26 years is becoming redundant for this financial year 2021, because 26 years only for TDS, TCS, advanced tax, hitherto. But the coming new form is going to give the 360 degrees of the SSC. That is nothing but the shares purchased, sold, bank debits, credits, fixed assets, immovable properties purchased, sold, vehicles purchased, sold, foreign travel, all types of transactions are going to be reflected in the new form which is going to come for this 2021 because of this year budget provisions. So if the officer is seeing this next year, following year, April 26 years, he will get a higher amount as if work done bill than the closing stock. Then what the option the officer is having? You have offered 8%, you have shown something as work in progress. The total concept of the Income Tax Act is the presumptive sections give you a shelter only for the business head income, that is the P&L account, not for your balance sheet. Sir, he is not having the books of accounts. Where is the balance sheet? I am saying the balance sheet items, not necessarily the balance sheet. So if the officer is able to prove that you are not having sources, means to have that much asset, your asset is not having the means, you declared some small amount as income, whereas you got a higher value property, whether it is a current asset or as a fixed asset. For example, a person 4 years has offered on his 1.5 crores turnover, 8%, 8%, say 12 lakhs, 12 lakhs, 12 lakhs. 4 years to 12 lakhs he has offered as income. He assumed that every year 2 lakhs is drawings. 4 years he could have saved maximum 40 lakhs as business income. Whereas in the 5th year, he purchased for 80 lakhs an immovable property. So 5th year also he is having 1.5 crores turnover and he is going under 44AD only. But the department can ask, the department shelter or say the safety thing what they have given is, we will not ask you to prove your business expenditure. We will not ask you to show the compliance of a disturbance sections, nothing. But when you got an asset, definitely you have to explain 69 unexplained investment unless you show the sources. So in addition to 44AD, he must be capable of, he would have got say 4 possibilities. He would have got more creditors. Sir, my business is selling only for cash, buying 3 months credit. So I availed my creditors credit to buy this immovable property, natural. So like that, maybe earlier old debtors were there, higher debtors, now less debtors. So I collected more debtors, it is the early year's income, opening balance you were saying. So the precaution to be taken is, even for 44AD people, bank accounts are to be fully analyzed. A cash flow statement preparation is most important. Even I go one step further and can say that even for a salaried person salary return you are filing, unless you go through his bank statement, more facts may not be coming to light. He would have sold his property, which he is normally not disclosing to the auditor while filing the return, or he would have closed his housing loan within 5 years itself. He purchased the property and within 5 years he sold the property and closed the bank account. So he is having negative capital gains, capital loss. It doesn't mean that this thing, because the ETC what he availed earlier, will become the income of this year because it is a pre-closure. So number of things will come. So for this 44 area of people, simply filing the business income and ignoring is a cash flow statement, ignoring is a balance sheet, which we can call it a statement of affairs, without preparing a statement of affairs and taking the other transactions. Because the businessman exclusively for business, he is not keeping the bank account. In the same bank account, he will mix all the transactions. As we know that for each head computation is different. Your house property interest you cannot claim under business, or your business interest you cannot claim under capital gains or the other sources head. So each head is different computation unless he keeps track of the transactions and he be able to give the sufficient explanation for his transactions. A correct disclosure may not be there. So we have to think of actually nowadays with the technology and the income tax department having a big data analysis tools and techniques, the total bank account it will analyze. The GST returns it will download and analyze. So the GST returns when they analyze, there is a possibility this businessman, what he has maintained and disclosed, may give a negative stock. That means you would have booked sales merely without purchases. Then it gives a negative stock. You would have made the cash payments into the bank without sales. So the sales as per GST and the receipts as per bank, overall 1 year it may match. But month to month, if you see, there is a possibility that in a particular month sales shown less, money deposits more because he wants to pay to the creditors. So all these things are all small mistakes, but unless we analyze, these small mistakes may become costly mistakes in the case of assessment. So that's how the precautions I have given. So the movable property purchase I have explained, the other bank loans taken and bank loans repaid. So the year-end statement of affairs is going to give the most safety, say, elbow if it is prepared only. If it is not prepared, definitely it is going to be a troubleshooting aspect. So the other income, the investments income, the investments outflow are all to be taken. Actually, the last mistake, the small and medium business people, they file the return. What I have seen in this 17-18 demonetization period, assessment period, throughout the country, I have got the reliable information. More than 25% of the assessments are without proper reply. Simply electronic notice is given, first time, second time, third time, as there is no reply, the assessment is completed. What is the difficulty? It is the email ID of the some accountant, some tax practitioner who has not taken care. So thereby, after the completion of the assessment, when the bank account is attached, because with this PAN number, how many bank accounts he is having, and in which bank account, how much bank balance, everything is now at the fingertips of the income tax department. Only when the bank account is attached in the February or March of this 2020, people have realized, oh, the assessment has taken place and a heavy demand has come. I have not responded because it is the email ID given. Nowadays, as per the income tax department, the notice, if it is served electronically also, it is a proper service. So this type of mistake should not happen. They should take care in giving the replies for every notice. So then the income and that 8%, 6% income claimed to have been earned, that also I have explained under this case law. Also I have given you what is meant by claimed to have been earned. Means the SSC must be in a position to establish that he has earned actually that much income from the business. So the partner's interest and remuneration I have already explained you. And then the 44 AE. See, now an interesting question may come. You are having 44 AB and AE, two sections. So for example, 44 AE, you are offering presumptive income. 44 AB, you have opted for a business income where you have incurred a loss. Yes, this loss can be offset against the other income. So now a small question about in the shares, one can have derivatives. Shares dealing, as I told you, is four types: shares buying and selling, taking the delivery, maybe investment as an investment, maybe as a businessman. Two options. The shares day trading. Day trading means he buys on the same day and he sells on the same day. Maybe first he sells and then buys, or first he buys and then sells. The trade trading is also a business. And then it's not a it is a business actually, not an investment. So similarly, the put option, call option, that is on a future date you are going to settle, is the derivative. So on a future date you are going to give delivery means sell, you are going to take the delivery means buy. Here ultimately on the future date, on the settlement date, only the difference amount, the price which you have fixed in the contract and then the actual price prevailing on the day, the difference only it will be settled between these two parties. The settlements positive or negative only is the put together is the turnover for turnover purpose, whereas actual P&L account, actual loss or profit you have to apply. Now the 6% has to be applied only on the gross receipts. That is the actual settlements, not a minus also. For turnover sake, you have to calculate whether these there or not for tax audit purpose. On the gross receipts only, because normally they are all through bank. It's all. Now, if a person is having the speculative transactions, which is a distinctive business, he cannot club ordinary business with a distinctive business. He must maintain the books of accounts. For a speculative business, separate books of accounts are to be maintained in addition to the normal books of accounts. So for speculative business, for example, loss is there, you cannot offset against the normal business. Speculative loss has to be carried forward, and again only against the speculative income in the subsequent years one has to offer. So now the biggest problem, as I have explained you, the assessing officer searching the bank account has found the receipts are in the bank account, the receipts are more than the turnover that is offered. So for the extra turnover, he extra credits in the bank, the officer will say, you please offer your explanation how you got that extra deposits in the bank. If you are not explaining, definitely he can go for 69. So the 68 maintaining the books of account through books of accounts, unexplained cash credits is there 68. Books of accounts are not there because we ourselves are saying, because even in 4480 the return form asks you, have you maintained the books of accounts? So if you say through these books of accounts not able to explain the source, maybe a capital receipt, maybe non-taxable capital receipt or taxable capital receipt. A loan is non-taxable capital receipt. So the 68, 69 sections can be applied even in the case of 4480. So the bank transactions have to be analyzed, and a suitable answer must be there before filing the return of income, not searching for an answer. Similarly, higher percentage of admitted income also must have some supporting evidence, because if the books are unreliable, that higher percentage, is it correct or not, can be analyzed. This is the decision. So similarly, based on the bank receipts, can the officer, now ultimately you say, no sir, I have wrongly calculated my bank receipts, it's only a business receipt, you see all the money is only through bank, through my debtors only, not anybody else, so my sales only you please increase, then only on the higher turnover, higher percentage only you can take, not the total amount as per section 68. So like the number of cases are there. So the sources, maybe as I told you, higher sundry creditors were there in during this year. Based on that, you would have purchased the asset. So similarly, fresh loans or old debtors collections may be there, which is not early debtors. If you collect, they may come in the bank, but it is not this year turnover. So this is how we have to take into account the total transactions to arrive the. Then can the AO ask the SSC to? There is an interesting case, decided case. You said 8% is your income. You please prove your 92% expenditure. Can the AO ask? Because the AO got some proof that he incurred some other expenditure. So can he go for 69C, which says unexplained expenditure? Unexplained expenditure means not the business expenditure, which is already deemed to have been incurred, because this presumptive income is a deemed income. The section, if you read carefully, it says this 8% or 6% or the higher income claim having is deemed to have been earned. The word is there in these three sections. Physically deemed. What is meant by deemed? I am presuming, the act statute is presuming means the assessee need not prove the remaining as expenditure. So the assessee need not prove, and the officer cannot say the other thing is under 69 as a unexplained expenditure. You have incurred some expenditure, I am going to treat this as a unexplained. This is actually 69C. For example, I perform my daughter's marriage. I have shown in my books of accounts 30 lakhs as my daughter's marriage expenses. The assessing officer has got the evidence, because either in a search or he might have visited a anonymous person as the marriage hall. He would have taken the video recording of the lunch taken, people, how many people, the decoration, the expenses. You would have got the proof that the actual expenditure is 50 lakhs. Then the difference between 50 lakhs and 30 lakhs, 20 lakhs he can add as unexplained expenditure, but not here the business expenditure. This is the case law 2016. You please go through. So that's how, after taking the presumptive sections, this is the difficulty and this thing. Now we'll go to, because now already 5:30, so up to 5:45, another 15 minutes for the other two sections I will try to cover, and up to 6 o'clock my time is there. So coming 15 minutes for the other two sections I will take up, and the last 15 minutes question answers. So whatever the questions the viewers are having, we will try to solve these, so find solutions for those questions. So 44A section, carefully reading, any assessee, so owning not more than 10 goods carriage vehicles, not passenger carriage vehicles, goods carriage vehicles. Goods carriage vehicles doesn't include the vehicle means JCB. So earth excavator is not a goods carriage, though it may be registered with the motor vehicles department. All the vehicles goods registered with the motor vehicle are not goods carriage. They may be passenger carriage, they may be goods. So goods carriage at any time during the previous year. That means in the year opening 8 vehicles are there, in the year ending 9 vehicles are there. But in between he sold with an intention to sell the old vehicles, he bought the new vehicles. So before selling he bought means the number crossed more than 10, he is not eligible. So during the previous year at any time, owning not more than goods carriage vehicles. Actually owning is the word to be highlighted, because a person who is in the goods carriage business, not only his vehicles, on a particular day his vehicles are already overbooked. So when business offer comes, he will take some other's vehicles on hire, and he will do the business, and he will pay them higher charges. Then those vehicles are not to be counted. And the ownership means not only the 100% ownership. Normally in hire purchase, vehicles owners, they buy the vehicles on hire purchase. So hire and these say financing people, NBFCs mostly, or even the banks, they give 100% loan or say 90% loan to the vehicle purchaser, and then they keep the registration in their name, and only when the last installment is paid, then they transfer the ownership, full ownership to him. So he is only a possessor of that vehicle. For having given the possession, the ownership is vested with the financier. So even then he is a deemed owner. For them also this section can be applied. Normally the goods carriage people, exclusively goods carriage people will be lesser, and the business people also own these goods carriage vehicles. Now let us say the example of a metal, stone metal or stone quarry owner. He is having a, say, the mine, and from the mine or mine owner he buys the boulders, and the boulders he will crush into different sizes, and then he sells the stone metal. So this for building civil constructions, naturally that's required. So the building owner will not have the vehicle, so he will ask the crusher owner, you please supply in your own vehicle. So similarly bricks manufacturers, they may have these goods carriage vehicles like tractors, tippers. So these vehicles are owned by the people who are having their main business, which is not the goods transport but some other business also. Now the question comes, if he is capable of segregating those charges, transport charges separately. Why? Because under the GST Act, if the goods are delivered with freight and at the delivery point what the price through invoice the person is collecting, he is liable for GST. So the transport charges, if you maintain separately and transport charges are collected, transport charges, because he is not a GTA, transport charges collected by a transporter, he is not liable for GST. So the transport charges will not form part of the turnover. Okay. Now the for goods carriage vehicle based on the turnover is not the income, only based on the vehicles per vehicle. Say heavy goods vehicle more than 12 tons carrying either on the unladen weight or the gross weight of the vehicle, which is recorded in the RC book. So the registration certificate will give the unladen weight or the gross weight. Based on that weight, heavy vehicle one rate and small vehicle lesser than that heavy vehicle means other rate. There is 7,500 per month here, or heavy goods means 1,000 rupees per month per ton per vehicle. So based on the different rates are there. No question of percentage on the turnover. Actually, a goods carriage person can have 4 crores turnover, 5 crores turnover, 6 crores turnover. Doesn't matter. Only vehicles and the income and the depreciation also deemed to have been given. So based on the vehicles only the this thing higher turnover is not a bar. So not based on the turnover, only based on the goods the income is calculated. So for example, because when we are talking about these presumptive sections, they recently introduced a presumptive opting person is not opting in a particular year, going for 44AB, he is prohibited to come back to 44AD for 5 years, subsequent 5 years. Subsequent 5 years means totally 6 years. Please, this interpretation is more important. A person, if he is continuously opting 44AD for 6 years, 7th year he can go for 44AB, no problem. 8th year he can come back to 44AD, no problem. But less than 6 years, he is having 44AD. If he goes out of 44AD, then he must be there in 44AB 1 plus 5 years, and then only he can come back to 44AD. He cannot continuously, he must get his books of accounts audited. This prohibition is not applicable for 44AE. This is there, 44AD subsection 3 is only for sorry, that is for partners interest and remuneration. This 5 years prohibition is there in newly introduced in 44AD. That 44AD newly introduced compulsory 5 years provision is not there for 44AE. Similarly, another advantage for this 44AE people is in 44AD, if it is a partnership firm, the SSC is a partnership firm, from that 6% or 8% presumptive income, further deduction for partners interest and remuneration is not there. If you want, then definitely your income is coming below 6%, 8%, you must get your books of accounts compulsory audited. Once you go for audit, continuously audit. That is the difficulty. Whereas a partnership firm can be there in 44A, but that partnership firm can claim partners interest and remuneration. There is no prohibition as it is there in that. That is not there, only it is deleted as a proviso. Here it is not deleted. So this 44AE, these the differences between these two sections. So actually vehicles owners, the depreciation is a block assets theory. So what is the difficulty and what care we have to take in these vehicles? Vehicles, because they are run on hire, so definitely not used for self business. It is the somebody's necessity. These vehicles are hired. Higher percentage of depreciation is there, and either for 44AD or 44AE, the business all deductions are deemed to have been given the eligible deductions. So So all the deductions are deemed to have been given means the depreciation is deemed to have been. So block assets continuously depreciation has to be calculated and keep ready, because on any year, if he is expanding his business more than 10 vehicles he is going to own, he need a opening balance sheet. That opening balance sheet must have a correct WDV gross block of the vehicles. So the preparation of statement of affairs and the depreciation calculation year to year has to be done. So now a person, as I have given you in the beginning, 44 year explanation, the doctor, advocate, engineer may have all three types of income, both 44 AD, 44 ADA, and can he opt all the three? He cannot, because there 44 AD says you are a professional having income, you are barred from 44 AD. But such bar is not there in 44 AE or ADA. So he can choose only 44 AE or ADA, but he cannot go for 44 AD. So there, as per the 44 AD turnover, based on the either normal income or a 44 AB income, he has to choose and apply. So TDS provisions, earlier there was a small difference between 194C and the other TDS sections. Now this year budget has uniformly amended that any person, they didn't give any exemption for 44 AD people. Any SSC being an individual or HAF during the preceding previous year, if his turnover is exceeding 1 crore, in the current year, he has to comply the TDS provisions. They are all applicable for 192 or 194C or 194A, J, HI. That means from your brother-in-law, sister-in-law, you borrowed the money, you are paying the interest, 194A will come. Though, because you are not deducted, the disallowance portion is not there in the business income, the TDS ITO is a separate income tax officer. He will say you are not complied. Your P&L account or say your nature of payments I have seen. So you please comply the provisions. So as a SSC in default, the TDS ITO will raise the demand with interest. And nowadays TDS provisions are so harsh in the sense for non-compliance of TDS, even the compounding is harsh. They go for prosecution, they say you pay 2% extra per month to avoid the prosecution, and then as a compounding amount. So sometimes the second offense 3 times, third attempt 5 times, 5%. So like that, very harsh provisions are there. One should be very careful. So better comply the law and avoid the penal provisions. That is the advice. So now from 1420 for professionals, 50 lakhs only is the income. For business people, 1 crore. Now we will go to the professional income. So the 44 ADA. So 44 ADA for only specified profession. For example, a university professor retired, he is giving coaching for IAS, or he is undertaking tuitions, you call. So can he opt for a 44 ADA? No, he is really a professor or a professional, but he cannot opt for 44 ADA because he must come only within the provision of 44 AA. Now an interesting question, common question is, a wife and husband both are doctors. They construct a nursing home. Naturally, to avail the loan, better a partnership deed, higher loan will come. So they constructed, they bought the land, built the nursing home, put some equipment, nursing home means some equipment will be there. Is that partnership form gross receipts is a business receipt or a professional receipt? So it is a business receipt only, because the difference between the profession and the business, more mental skill than the capital risk. So the doctors having invested a huge amount in the nursing home, it is a business, capital risk is there. Definitely it is a business. This view is given by the ICA tax audit guidance note. If you go through, this view is given by the ICA also. So if they run only a clinic, it is not a nursing home. They are having their own clinic. So with small equipment, definitely you can say it is a profession, though it is a partnership form. Same wife and husband, if they constitute LLP, as we have seen in the earlier slides, LLP is not eligible for 44 AD. So that's how we should see that if it's a partnership form only. So similarly, for the profession also, up to 50 lakhs gross receipts only, 50% of the gross receipts is the deemed income or actual higher income. So if for example, a chartered accountant, 40 lakhs gross receipts, he can admit 30 lakhs as his income, no problem. And 50% comes to 20 lakhs only. But he got 30 lakhs income. He can offer 30 lakhs also. Still, he can say he is opting 44 ADA, but CA Institute says books of accounts have to be maintained by every professional. But under the Income Tax Act, the desirable sections, we need not prove or say, go to say that we have complied. So as I have already told you, there is no 5 years. That means for a professional who opt for 44 ADA, either as a partnership firm or as an individual, even as an LLP, most of the professionals go for LLP. This 5 years continuous tax audit, compulsory continuous tax audit is not applicable. Only for 44 AD. As we have seen, it is not there in 44 AE, it's not there in 44 ADA. So this is how you must look into this nitty-gritties. And the partnership from interest and remuneration, though in 44 AE we have seen they are allowable from the presumptive income, in 44 ADA they are not allowable. So once 50% means they are not again deductible from that. So the 50 lakhs, that is a TDS limit, is a 50 is applicable for individual HF. If it is a partner firm, right from the first rupee. Now the SSA based on his 26 As at the time of filing the return has filed his on gross receipts of income. On the day the AO, assessing officer, opened the 26 As, some more gross receipts are there, some more TDS is there. Then what is the recourse? This is the case law. It says even on that extra turnover which is not offered by the SSC, only that extra 8% only has to take, not the extra total amount he cannot take. This is a presumptive section based judgment. So by chance through 26 As he found, because 26 As can be amended. Sometimes during the previous year it is not uploaded correctly. After 6 months, after 9 months, somebody else will upload, which the SSC might not have noticed. So because he is not maintaining the books of accounts, it slipped from his attention. So some wrong declaration, nothing serious, because the extra also is the work done, and then that 8% only is. So who is not supposed to maintain books of accounts? Can the AO, based on some discrepancies in the books of accounts, or say he is not supposed to maintain the books of accounts, but when the assessing officer asks, he produces some books of accounts. The assessing officer finds some discrepancy. Based on the discrepancy, can he make the addition? This is the case law. No, he cannot make the addition. So now, last but one slide, the higher turnover. Actually, the higher turnover means 44 AB case. But when the SSC is asked to produce the books of accounts, the SSC produce the books of accounts, but those books of accounts are not reliable. In the sense, 100% Pakka books of accounts are not there. Then the assessing officer, once he rejects the books of accounts, can he go for presumptive sections suggested rate? Can he apply on that higher turnover? It can be applied. This many number of decisions are there. The higher turnover also they can apply. In fact, in many other businesses, lower percentage also are given by several tribunals. For example, Andhra Pradesh ITAT has given for a wine shop business, even if it is a tax audit case, 3% is reasonable. Number of decisions have come. So not the 8%, 6%. Wine shop always catch sales only. But in the case of liquor business, because of the government stringent, say, unlike Tamil Nadu, where the government itself is seller. Now in Andhra also, from this financial year, government is the seller. But all these years, for past 20 years, private people are the sellers. They buy from government, they sell it. So the number of tribunal decisions, 3% is sufficient, lesser. But here the case laws which I am suggesting, number of case laws, both Karnataka, Punjab and Haryana, Delhi, Pune, so all these tribunal decisions, what they say, yes, even for a higher turnover, the presumptive sections suggested rates can be applied even for a higher turnover. This is how the presumptive sections and the case law available and the interpretation. So in the given time, I have explained you the presumptive sections advantages and the precautions to be taken, because it's a the as amended in the written form 4 ITR 4 itself, the total gross receipts we must most carefully make a reconciliation statement. What is the actual turnover? In the cash bank receipts, all the bank receipts may not be offered as a taxable turnover for a 4480. So what is the bank receipt? How all the bank accounts you must put together in one column you have to. That means unless you maintain the books of account, especially on digital platform, unless you maintain, it's even opting for presumptive taxation also merely based on GST returns. If you fill the income tax return, definitely it is going to be a big trouble, because the income tax server and GST server will talk together based on the bank accounts data. The income tax officer will find the discrepancy, because that much a big data analytics are available with the income tax department. We have to be very careful in opting this presumptive taxation. So I thank the branch for giving me this opportunity. Now we will go to question answer. So I will close the PPT. So only based on the questions that are being prompted by the organizers. Madam, I think you are ready to do some
Yes,
questions.
yes.
Are there any questions?
Yeah, we have few questions there. I just posted there itself.
Or else you read the question, madam. I may not be able to in the PPT. If I close, I am not able to get you.
Go
Uh,
to the broadcast screen. You can able
so
to see.
shall I go to broadcasting screen?
Yeah, yeah.
Yes, madam. Please. Now I am able to see. Please tell me.
Fine,
Yes,
fine.
shall I read? A has opted for 44 AD assessment year 1213, could not produce records with respect to gross receipts, believes he need not maintain records for previous 8 years since books are dispensed with remedy before the EU. Sir, the businessman has to preserve the records, not necessarily the books of accounts. Records he has to maintain for 7 years, 7 years. So the current year plus previous 6 years. So the gross receipts this much only. Some record he has to produce. So it is the burden of the assessee to produce the records. He has to produce the records, Ashok Doreshwam sir. So it is the burden of the assessee to maintain the basic data. That is his business sales, his turnover is that much only. He has to preserve. So when he asks, but the assessing, when the assessee himself is not having, how the assessing officer will get it? The assessee sales, for example, sales receipts, sorry, sales invoice serial number and amount. That is sufficient. Sales register we call generally. If he is producing a sales register, this is not the correct sales register. How the officer can prove? So that much precaution one has to take. Yes, sir. The next question. Contractor deposited security deposit with the contractee as per terms of the contract by way of a bank term deposit. Is interest and on such deposit to be, yes, it is true, sir. So the interest and definitely is the business receipt. On that also the 44 AD presumptive income has to be offered, including the interest, including the interest. Yes, sir. Dividend received on shares of cooperative bank, shares acquired as per terms of loan sanctioned by the natural, because cooperative banks to sanction a loan, they want you to deposit some amount. So the interest debit side is there without offsetting the debit interest and credit interest. In your P&L account, credit interest will be there. So on the credit interest, actually, along with the business gross receipts, the interest also will form part of turnover. So the presumptive rate has to be applied. That is the answer, sir. Next. Mr. Natarajan. Yes, sir. Can a person owning less than 10 lorries opt for section 44 AD since he has entered into contract for carrying gas and TDS minutes? Definitely, sir. Sir, the 44 AE, it seems indirectly you are referring to, his business is not exclusively goods carriage, he is having something extra services, loading, unloading, or say extra services, not merely plying the goods carriage vehicles. In addition to vehicle hire, you are having some loading, unloading, maybe some other conditions also you are having. So your business, instead of goods carriage, you are having a contract to do some service. So definitely, instead of going for 44 AE on the gross receipts, 44 AD if you are applying, definitely you can go. This is my answer. Yes, sir. Next. Whether CA can do intraday trading in equity. Sir, intraday trading is a business, sir. So CA Institute Income Tax Act is not prohibiting. You are asking the question, I think, from Income Tax Act. Income Tax Act is not prohibiting. CA Institute prohibits a chartered accountant from carrying on any business. So he can have only the others investment income. He cannot have a business income. Day trading, there is a within the same day buying, selling, definitely is a business. So chartered accountant is prohibited from the CA Institute angle. From income tax angle, nothing. This is the answers. Next.
That's it, sir. We don't have any more questions.
So that's it, sir. All the questions are over, sir.
Okay, madam. Please, please.
Okay. Thank you very much, sir. It was indeed a very informative session. Thanks on behalf of Salem branch. We totally enjoyed the session. 2 hours ponade theriyala. Very, very interesting. And this topic was chosen by you, but you know better that what the members need. So thank you so much for choosing a excellent topic for Salem branch. And always Salem branch will be really thankful for the timely help. நீங்க எதுவா இருந்தாலும் எங்களுக்கு சேலம் பிரான்ச்சுக்கு timely help. Thanks a lot on behalf of Salem branch, sir.
For all your affection also, I am grateful because how many participants, madam? I don't know how many have participated.
Sir,
around 60.
Around 60. Okay.
Yeah.
No, in the branch, had it been only 50% discounted number will come. So because it's a digital thing, 60 have participated. Maybe thank you, madam, for giving me the opportunity and.
Actually, in bank audit, sir, that is by the 60. Maybe they'll view later. This can be viewed later. This will automatically recorded, and this can be viewed later also. Most of the
Okay,
CA bank audit. That's why. This,
natural, madam. Please.
Thank you, sir. Thank you, and thank you for patiently answering all the questions also, sir.
Thank
We
you.
have announcement members. We have been asked on and off, will the structure, I mean, unstructured CPE be given by the Salem branch? We would want to make an announcement. You have to log in into the CPE portal, and on self-declaration basis, the members have to get the 2 hours unstructured. I again repeat, the members have to log in to the CPE portal and claim the unstructured CPE. Salem branch would not be doing it for you all. So we just wanted to make this clear because many members were not clear and they were asking us questions regarding that. And one more information, we have a webinar on 17th on GST by CA Sumit Kedia. Please participate. Say we are so happy that so much of participation. That's why we are keeping webinars every week. Thank you, members. Thanks for your support. Stay home, stay safe, stay healthy. Thank you, and Jai Hind. Thank you, sir.
thank you, sir.